To continue with today's DEX theme, let's take a look at some information and charts on Sushi for Brave New Coin. So Sushiswap, or Sushi as it's known, is essentially a Uniswap clone, or at least began that way. I'm not going to go into the nuances and differences between the two, just know that they are different in various ways, including rewards, pools, governance, staking, tokenomics. Although they may appear very similar in that they're both DEXs and AMMs, there are definitely big differences when it comes to how tokens get released or have been released for Uni versus Sushi. So currently there's around 4.3 billion in liquidity. Volumes continue to increase week over week, month over month. So that's what you want to see if you're an exchange. You want to see people coming in, using your services. And if you are part of these pools, you want more users playing on your playground so that you can capture those fees through the AMM. So it's definitely a win-win as far as that's concerned. Now, can any of that translate into bullish token price? We'll see. It looks as though the Sushi TVL versus market cap debate rages on, where as some people suspect or expect as much as a 10x growth in the Sushi token price. I think other people are just kind of in my boat where they don't necessarily see big potential for governance tokens at this moment. Now, that doesn't mean they won't continue to do well. I just think the use case in general is a bit thin. But if we look at TVL over time, again, just continues to increase. That's what you want to see. Down slightly over the past week, but nothing too major. Trading volume, essentially all-time highs on the daily. Transactions on the exchange was at an all-time high a few days ago. Users all-time high. Number of Oracle calls, not really sure why this is down. This could be a V1, V2 transition. But on the available metrics from that end that I am able to see, things look like they're on the up and up. Sushi's still number 2 relative to Uni as far as volume is concerned. And if we look at the Sushi volume, it's definitely noticeably increased even on the daily level relative to everybody else. And it's holding its own really on the monthly level relative to everyone else. So for some people, Sushi will always be the backstop for any failure of Uni or any poor decisions by Uni as far as what's happened to version 3. Maybe some people will like Sushi over Uni. It's good that there's competition. It's good for the consumer, the trader, all that stuff. The more the better, honestly. So it's good to see that Sushi exists and is slightly different than Uniswap. Both Uniswap and Sushi are in the managed DeFi portfolio I trade for Techemy Capital. There's no mins or maxes for this portfolio. You can deposit ETH or USDC through Enzyme. You can always pull up the constituents of the portfolio through Xerion if Enzyme isn't working or displaying correctly. And both Uni and Sushi are in this portfolio. And this portfolio consists of oracles, DEXs, DEX aggregators, lending and borrowing, and miscellaneous stuff like REN, wrappers. SNX is kind of lending and borrowing plus, but those categories determine the allocations basically. If I want an even distribution, 20% between those categories, then I have to adjust the AUM accordingly. But that's how it works on my end. A little view on how the sausage is made. If we look at the Sushi transaction counts, this was the initial token release. Since then, just like Uni, transaction counts haven't really told you too much. They're certainly up since April, but overall just flat. No real big changes. Same with average transaction values, both of which will go up and down with gas prices. If gas prices are high, transactions will decrease, and average transaction values will increase. Just because you're pricing out smaller transactions, you're pricing out people getting in and out of pools, it's just going to slow everything down. So the more that these DEXs can move to layer 2, the better for everybody, and the easier, cheaper it's going to be to get in and out of those pools on those exchanges. Here is NVT and active addresses. This was the initial token release again, and since then, active addresses have noticeably increased since November relative. If we compare that to Uni, where it's kind of a roller coaster ride, Sushi, at least you can say yes. Since November, active addresses have risen. from November to March. And then since March, they've kind of went sideways, nothing too exciting here. NVT has declined significantly since March, so it's telling you price relative to market cap is looking more and more bullish. And like I already mentioned, I think what most people pay attention to is fully diluted value of market cap versus total value locked. So it's maybe worth paying attention to that ratio over these on-chain metrics and trying to discern a signal from there. If you look at the Google trends for Sushiswap, I don't know anyone who actually says Sushiswap, they just say sushi, but according to Google Trends worldwide past 12 months, this has also, like the Uniswap, Google Trends continue to rise to all-time highs. So people are definitely using DEXs more than ever, looking at them more than ever, figuring out AMMs, figuring out staking, governance, all that stuff. Lots of articles being written about DEXs. And just like the uni discussion, any regulations that come down are likely going to hurt the exchange. They're going to hurt the token price. So keep that in mind. Be on the lookout for that sort of thing. So if you're bullish on the future of DEXs, then it's reasonable to believe that the coin should continue to do well. And it's certainly possible that regulation from any country, specifically US, could put a temporary damper on any bullishness in the token price. Let's flip to technicals. Not too much to say on the USD side of things. Much like Uni, it's still holding above EMAs. It needs to hold above to remain on the bullish side of things. This isn't January to February situation, obviously. Definitely more sideways since February. But again, you're kind of in two camps. You're either believing in DEXs in the future and the regulations aren't going to matter, or you're a little maybe apprehensive, looking at this chart thinking it looks more neutral than bullish, and maybe sitting on the sidelines until things clear up a little bit. Something else to mention on the price action here, it's trying to attempt some sort of, I'm not going to say V-bottom, but inverted head and shoulders type situation. It's definitely not painting anything that's distinctly bearish. So trend-wise, I think this looks okay on the 50 and the 200. The cloud on the 12-hour calls it neutral with price in the cloud, and not really too much to comment on RSI either. It kind of needs to get above 16, 18 again, because what you want is this clean ride that you got from late November to the beginning of March, really. So this is the trend you want to be trading. This is not anything anybody wants to be trading. Not anything anybody really wants to be holding either. It's much more fun to just set it and forget it on something that looks like this than being in this ambiguity zone of, okay, is it above the cloud or below the cloud today? You know, okay, is it crossing bearish on the high time frame EMAs or not today? Nobody wants to be in that position, right? It's just easier to be in any trend, up only, down only, it doesn't matter. That's much more comfortable than than whatever this is. So much more neutral than Uni, but I wouldn't call this bearish just yet by any means. On the BTC chart, it looks great actually. It looks like it's ready to break out. The cloud's ready to flip bullish. Price is ready to be above cloud again. And RSI is definitely on an uptrend since April. So it's not too hard to outperform BTC right now, considering it stalled at 60K and then has pulled back significantly since then. But this is definitely one of the breakout charts. Again, you want to be trading this. You don't want to be trading what's happened since February to now. So it's looking like it's getting ready for long entry signals on the BTC pair. On the ETH pair, this does look bearish. It's definitely in a bearish trend. It's been down only since the end of March, but it does have shades of a continuous bullish div here, bullish divergence, since it broke below the 200-day moving average or 100-day moving average. So this isn't like a strong buy for me here, but it is potentially worth rotating into stuff that looks like this because you're getting this multi-week bullish divergence suggestive of weakening bearish momentum. So I think DEXs are here to stay. I think everybody's on their toes, just waiting for the next shoe to drop as far as regulations are concerned regarding Binance or DEXs in general. Volumes continue to be high and remain high. Doesn't look like DEXs are going anywhere anytime soon. Now, if you believe in the future of DEXs, but don't necessarily want to pick a winner or loser, again, you can look at something like the Managed DeFi portfolio for Techemy Capital and see how I'm trading that, or join the fun on Enzyme.finance. But that's very much the investment thesis with this is I don't know what's going to win or lose. I just know these are the safe DeFi coins. I'm not going to get rugged on on Sushi, right? Or holding Uni. That's not going to be the issue. If any of this stuff declines in value, it's going to be because the market as a whole isn't doing well, or there's some market-wide news catalyst. You know, I can sleep at night holding these coins, knowing that they're not going to disappear on me. On-chain metrics for Sushi are mediocre, like any other governance token. Google Trends all-time high, and both the USD and BTC pairs are looking more and more like they're on the bullish side of neutral than the bearish side of neutral, with Sushi ETH looking ready to be rotated into based on the multi-week bullish divergence. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.